So we've got the structure here mapped out now. So we've got this W formation. All right. So that is a bearish scenario because this is a reversion pattern. You can see that on the line chart. So that's that W formation. So do expect a correction. So it's always good to be in anticipation so that when this market starts pulling back, that you're not running to the to the sidelines and scrambling out of your trade and taking profits too early. Let it play out, set and forget, as they say. So monitoring for a pullback and with anticipation that we're going to get support, demand in here. I mean, you can draw the Fibonacci. What is encouraging is that we've broken these prior support. So that was the first resistance. So, well, this was the first resistance. We sailed through there. This market has intentions to move up in line with the daily analysis. So we've broken resistance over here at 123.97. We're tapping into the 124 handle. Now we've got to take out 124.02, 03, 124.10, and that would be really setting us up for higher levels. So, I mean, I've moved to break even. It's a no-brainer. I don't want this to come back on me and turn into a loss. So I'm at break even. I got in, I think, well, I know at 123.83.4. Now and my stop loss is just above that. The Fibonacci scale brings us into this as a retest zone, 50% mean reversion mark, 123.90. I mean, you might even come in into here, just below 90. We can look at the price imbalance as well. Sorry, bear with me. Yeah, so I've just put on that indicator just to make it easier. Sonar Lab, fair value gap. So even a move back into, we've got a fair value gap between here and here. So over here, the price can easily come back into before moving higher. So just be aware of that as well. And if it holds there and starts moving up, then that will be really encouraging. I might even be encouraged to re-add to the position because I've taken profits on the add, so I'm back to half risk on this trade. So if we come back in and start building bullish continuation, but again, this is not the sort of stuff I'm looking for. I'm looking for the explosive, done within an hour trade in Wall Street, but we didn't get any of that today, so I've been left with this. So that's my outlook on this. Now, in terms of where we can head up to, what we can do is actually why don't we draw a volume profile on this? So all of this sell-off, let's go into the lows of today. So we've also got the point of control down here, which is interesting. So if we do pull back, then maybe this will give us some support as well. The highest volumes that was transacted within this bearish run. Again, into the 90s, 123.95. And a break below 88 would be concerning because all of this area here should be demand. So if we break here, then game over. All right, so keep that in mind. Now on the upside, as I said, I was going for 24.20. That aligns with these lows, this high volume area up in here. That's my target for the day. Beyond there, if we can get beyond there, we're likely coming up into this area here. You have the break of structure on that candle. The lows, it moved up, found resistance, and dropped significantly. So this could be an area of interest as well. So we'll just mark the high. Be optimistic for 124.38, 124.34. And then a breakthrough there, you're looking at the highs, a test of the highs towards 124.50. And as we come to end this, how many minutes we got left? We got 3 minutes of this 15-minute rotation. Looks like we're getting a doji and the makings of a pullback. All right, so plenty of people now taking their profits, don't want to hold on to the trade, and we're getting profit taking moving in. So we're hoping for demand to keep us in the trade for the continuation. Strong hands. So we've got weak hands exiting the market, strong hands staying with it, perhaps adding to the positions like I will be if this proves to be support for the move up.